What up, y'all? Welcome back to the Invest vlog. So the portfolio did pretty good this week, up 10, almost 11%, about $35,000. But this week, what I'm looking for is just information. That's all I'm looking for because I think the way the market reacts to the biggest companies in the world reporting earnings is going to tell us a lot about how the market feels altogether. And it's going to be a big week. So right now it is Sunday, April 27th, and we have the rest of the Mag 7 reporting earnings this coming week. And also some fun ones in there too, like Robinhood, which is one of my favorites. So I'm really excited about that one, probably more than the others. But right now we're in a weird place of this like 90-day tariff pause. Negotiations are still like ongoing, but the China thing is a big question mark. And companies like Apple, who are very hardware reliant, right? Almost all majority of the revenue comes from hardware, which a lot of it is made in China and requires cheap labor. So how are companies going to adapt, right? There's still a lot of uncertainty. Even though this was a really good week in the markets, I think we are still on the tariff wheel, right? The Ferris wheel, which I call the tariff wheel. So we're still in that loop, right? And I wouldn't be surprised if this week we retraced half or all the gains that we just made, because that's just how it's going at the moment. So what I want to talk about first is a real quick update on my portfolio. So I've been selling options like a madman. If you're, in the group, you have seen that. I won't shut up about it, right? So far, I have maybe 40K locked up in collateral in options, and it looks like there's a chance I might hit the 8 to 10K mark of income from options in April. So May is going to be a really good one because I feel like I can surpass that. So I've been selling options. Haven't been doing a crazy lot of buying individual stocks. I've already talked about the ones I added on the recent dip, but let's get back to the actual market. So this is really weird. This was really weird, right? Not to me, because I just know Tesla is so unpredictable, but Tesla reported arguably really bad earnings, right? On the 22nd, like just last week. And right after that, it proceeded to rally 24% this past week. So really bad earnings, but up 24%. You know what that means? Remember I said when the market whispers, you have to listen? The market is telling you that Tesla has bottomed, right? Because when it goes up on really bad earnings, imagine what it does on a really good earnings. And in reality, like Tesla it's not like buying shares. It's like buying an out of the money call option on the future of artificial intelligence and robotics converging into this one vertically integrated company that is a clear leader in the specific niche that it's in right now, which is EVs, but it has other branches as well, like energy, humanoid robots, etc. So I think honestly, the Tesla rally this week was because on the earnings call, Elon reaffirmed that I think in June this summer, the robotaxi test of like, I don't know how many, 20, 100 vehicles that they're going to be testing in Austin, Texas for cybercab robotaxi rides. So driverless, it's like driverless Ubers, right? So we are super close. I would say Tesla is 95% of the way there to like having a software that is able to be safely regulated and released to the world. But that last 5% usually in software takes a long time. But I don't doubt that we'll get there in the next 12 to 24 months. And what I mean by that is safer than humans, no question, absolute kick-ass, self-driving for every Tesla car out there. Anyway, I'm not going to make this a Tesla episode. I don't want to. But one last thing about Tesla is in China, their sales have surpassed year to date the previous year. And mind you, the previous year, the Tesla Model Y was the best-selling car in the world. So the fact that it is on pace right now to have a bigger year than last year, even though Model Y refresh, which is, by the way, that is why their Q1 earnings, I don't care what anybody says, that's why Q1 was so bad, because they clearly said it on the call that during Q1, they stopped the current legacy Model Y, right? The old one, before the Model Y Juniper came out. Let me show you guys for those that don't know. They completely stopped the old Model Y from producing like anymore in all factories that produce it. They let those sell out completely. And then at the same time, they were putting this Model Y on the production line, started making that one. And then towards the end of Q1, they finally started selling the new refreshed Model Y Juniper, right? So that was all happening all at once in all factories all together. And yeah, that's why Q1 was pretty beat. Okay, another weird one this week was Google. So Google actually posted really good earnings, right? Which I think surprised a lot of people. And they were pretty flat. I think the day after earnings, they were up maybe like 1 or 2%. Right now, Google is in a really weird place. It's because the DOJ, Department of Justice case, right, that could potentially split up or make them divest or sell some of their businesses because they're flirting with being a monopoly way too much. So could they force them to sell their search or advertising business, or YouTube? Well, they're pretty diversified. So, you have the DOJ case, and then you have the fear lingering that ChatGPT and, other AI chatbots are going to take a lot of market share from Google search. But let me play you this right now from the All In pod, because I thought it was interesting.
Resiliency in Alphabet that I don't think people have given the company credit for. First of all, I'll just highlight with the dividends they're paying, plus the share buyback, you're basically getting a 4 or 5% yield on the stock. So the dividends are like 10 billion a year, and they're announcing 70 billion back on 2 trillion in market cap. So you're making 4% a year just by owning the stock in the dividends and the buybacks. Then if you look at the revenue, it's 90 billion.
Essentially what he's saying is they just announced like $70 billion of buybacks plus the dividend that they already pay. So just by owning the stock, you were getting 4% returns per year, and no matter, what the stock price does. And on top of that, what he went on to later say, I don't want to play the whole entire clip. He's saying, what's the worst case for Google right now that everybody's kind of scared of? ChatGPT takes, let's say, half of their entire search market revenue, right? Which is would be the worst case. Well, he's saying their other businesses are doing so well that even if ChatGPT were to take, in the worst case scenario, half of Google's search, the other businesses, because the way they're growing, they would bring it back to parity. They'd bring the total revenue back to parity fairly quick. But also, right, you got to think about what's the upside of Google. When you search something on Google, like Google DOJ case, you now notice that there's an AI overview of almost everything you search for. So Google is not going to just let themselves get disrupted. They've been in AI longer than ChatGPT has been around, right? They're so diversified. They acquire so many startups, and in the background, their hands are literally everywhere. And they have their own frontier language model, which is Gemini, and they're integrating that across their products, as I'm sure you've seen. So I think they're going to readjust what this search page looks like. And what they'll probably do is the search bar, when you search something, you won't have to click on it again. It will be like ChatGPT, where you see the cursor blinking already, and it's like a live chat almost. That's what it feels like. So you get the AI overview, in my opinion, and you'll still have all the websites below that are like sources that maybe if you don't, okay, the AI overview is cool, but you actually want to look at different websites. Maybe you want to go to the official .gov website and look at the case. So Google is not going to let themselves just, get washed up by ChatGPT. They have a competitive language model to OpenAI. So, they're in the race. So if anybody thinks that Google is just going to lose their search business is just done, it's going to get killed, I think that's foolish, very foolish, because Google is not playing around. Yeah, so right now we're in a weird space with the whole 90-day tariff pause. And, my opinion, my take on this, and I won't talk about macro too much, is there's a bunch of deals, right, that Trump is making in the background with a bunch of countries, right? Let's exclude China for a second. And he's getting ready to batch those into one big pile and announce them. Let's say we made a deal with 50 countries, good trade deal with 50 countries, and announce them in one day, right? That'll probably give the market some relief, but we still have the China thing, which is uncertain, because right now in the headlines, if you're looking at all the headlines, especially on X that are coming out from the news accounts, you see Trump says talks with China are going great. Then the next headline is China says Trump is lying. China and the US are not having any talks, right? So you don't really know what's going on there, but that is the most important one, because all the manufacturing in China that businesses rely on is, far outweighing all the other countries as far as US business risk. You'll see gold reacting to the current market. So this past week, the stock market went up and gold actually dipped a little bit, right? Well, because the more we go risk on, you see it here, right? Crypto and stocks go up. Gold, bonds, etc. are less attractive, and we're kind of doing that in a trampoline fashion, not in a wave fashion. It's like we're jumping on a trampoline between risk on, risk off on very small fractals right now. So it's a really weird time, but it's a great time if you're doing something like I am and selling options, because it's just easy money, right? Selling credit spreads on the S&P 500. All right, so what to look out for this week in the markets? First off, looks like Microsoft and Meta are reporting earnings on the same day, on Wednesday, April 30th. And then Amazon and Apple are reporting the very next day, on Friday, to end the week. And then also we have Robinhood, which I'm most excited for. And I think Robinhood is on Thursday, the 29th. In my opinion, don't play these earnings, right, with call options or put options, Because if you play Google, for example, right, both calls and puts got burnt because Google stayed literally flat. But this week, what I'm looking for is just information, right? That's all I'm looking for because I think the way the market reacts to the biggest companies in the world reporting earnings is going to tell us a lot about how the market feels altogether. All right, guys, thanks for watching, and I'll see you in the next one. Let's see what this week brings. All right, guys, thanks for watching. I'll see you in the next one, and let's see if we get any big fireworks this week. See ya.